welcome to Property Matters here on Dublin South FM. You can contact the show on Twitter, Facebook or LinkedIn at iPropertyRadio or email hello@iPropertyRadio.com. Your host for today is Brian Fox and myself, Carol Tallon. And first up today, I'm joined by Byron MacDonald of REA MacDonald in Lucan and REA spokesperson for a pretty significant report that issued in the last day or two. Barry, you're very welcome.
Thank you, Carol.
So I mentioned REA has issued, REA routinely issues reports on house prices, and they're always met with the same amount of interest as other house prices. You know, it's become a bit of a national pastime. But this one is really significant because it's actually putting numbers on things that we've been speculating about since the outbreak of COVID. So you might just talk us through some of the headline figures in the report.
Yeah, thank you, Carol. So on the actual report and the survey, just by way of background, our survey comes out on a quarterly basis. And what we do, just so your listeners can understand how it's based, we quite simply ask our agents who operate all around the country, what are they selling your typical average 3-bedroom semi-detached house for in their area? And it's just the simplicity of it has helped us track the kind of levels. And it's been unerringly accurate since we began it in 2013 when you look backwards. What we believe is the kind of USP of the survey is that it's based on actual selling prices. It's not based on guide prices, which can be so misleading, as you well know. And it's not based on sold prices, which can have a time lag issue. It's based on real-time sale agreed prices. So we believe it can be quite a good indicator of where the market is at any snapshot point in time. But our latest report has indicated that, unfortunately, more bad news for buyers. Values have gone up right across the country. But where the detail shows the real interesting facts is when you look at the locations where those increases are at their highest levels. And that isn't in the usual urban city centres. It's actually more in rural areas and regional Ireland, which has seen the highest price rises. And if I can just give you some of the figures, Dublin, Galway, Cork, Limerick, for sure, they've all gone up in value, but you're looking at an average over the summer 3 months of about 1.5% to 2.5% in each of those cities. But it's outside of there where we've seen a far more, I will say, alarming rate of growth in values. Tipperary led the way this time for whatever reason, that they've seen an increase over the summer of a staggering 9.2% on their typical 3-bedroom semi-detached house. And this is mirrored in other counties, maybe not quite as extremely, but Donegal is up over 8%, Kilkenny's up 7%. The list goes on right across the country. And so what we're seeing, we believe, is a continuation of this, what I refer to as a phenomenon that begun during lockdown, which is buyers are looking outside of the cities again. It happened during the peak of the market back in the early 2000s. And I think that was very much only led because of the costs in the cities. It was pushing people out. They just literally the affordability issue. Whereas now I think there's a little bit more to it. And I think people are embracing the opportunities that are being given to them to change their lifestyle, to move out, to get more space. Broadband obviously is a huge factor. It's been rolled out right across the country and it's made places wide open for business that maybe it was impossible, a short number of years ago. Also, employers have changed their attitude. A lot of employers have come up to the mark and given their employees opportunities to work remotely, or at least have a flexibility with regards to going into the office.
You know, Barry, I can't remember a time when there has been so much change, but there are so many reasons behind this change. And normally we can attribute something. So, during the crash, we knew what was happening. As recovery took hold, we knew what was happening. Now, the dynamics are really so much more complicated. And you and I both entered this industry before there was even a property price register. We didn't have accurate data. And so that's why I think we're so appreciative and we welcome any sort of data. And actually, I wasn't aware that your stats were based on sale agreed. I actually presumed it was sold. So that actually gives a more timely and up-to-date feel. But, one of the things that I'm really interested in that I think REA are uniquely positioned to capture is sentiment. So you understand your agents are meeting people as they are relocating to these areas. I presume they're capturing some insights into why these people are returning and do they have a connection to the area?
Yeah. So again, getting back to the way the survey and the simplicity of the survey, when we issue the survey, we issue an Excel report to all our agents, and quite simply, it's asking them about, yes, that value of the 3-bedroom semi-detached house, but there are obviously a few other questions, but there's not many. One is, how long are they finding it's taking to sell a house? What type of ratio they're seeing between buyers from cash to mortgage buyers, and also where the real interesting facts come and the real interesting nuggets is we just ask our agents to take a moment and write down a few comments on the market, and that's obviously where the sentiment comes in. So it's all great having the data and the numbers, but to read the sentiment, otherwise we're scratching our heads in some circumstances, wondering, well, why is this happening? And so in the latest report, I know our member in Roscommon, Seamus Carthy, he had indicated that he's finding approximately 3/4 of his buyers are families returning from either Galway or Dublin back to the Roscommon area. Now, he always had buyers that were coming from those areas who always maybe planned to raise their kids where they grew up as adults. But he's just finding that the quantum, the percentage of buyers that are making that move is much, much higher. And I actually spoke to him when the press release was coming out just to get further discussion with him, and he just was really surprised by the step up in quantum of that phenomenon.
Okay, and again, to have that amount that actually have links to the area, I think that's one interesting perspective. And I wonder, is that mirrored across the West Coast? Because I think there are parts of the West Coast that tend to attract people, like, for example, West Cork or Connemara. They have in the past tended to attract people who don't have connection to the area.
Absolutely. They see the beauty, perhaps, and the remoteness and the wildness of the wild Atlantic. Exactly.
And it's great broadband there.
Yeah, it's now quite possible that a lot of them can do the majority of their work. And even if you are, out, we'll say, admittedly not too far beyond the likes of Galway City, you're still not too far from Dublin, that if you did need to do that one day in the office a week, it's highly possible. Look at our friends in America. A 2-hour commute over there is nothing to some people. It's kind of staggering to us because it wasn't something we have seen before. But if it's something you're doing once a week or once a fortnight or once a month, for a lot of people, look, it's not for everybody, but for a lot of people to live in a place like that, to be able to buy property that's far more affordable, it's a fantastic thing we're seeing, and it is bringing fresh life into some villages that maybe had really suffered from, the youth growing up and leaving, going to the cities and going abroad. And now there's fresh life coming into these places with enthusiasm for the area and a want to be there and want to invest in that community.
Bringing new businesses and business ideas. But actually, you've touched on something important there, and that is a commute. Because quite frankly, 40 minutes sitting in traffic is too much of a commute. Yet people are happy to do 2 hours up the motorway if they only have to do it twice a week or thereabouts. Could that be one of the explanations for the almost disproportionate increase in Tipperary? Because Tipperary would be a fair hike if you were doing that to either Cork or Galway or Dublin, not Limerick, but certainly in the other cities if you were doing it every day. But if you were doing it once or twice a week, it's infinitely manageable.
Yeah, absolutely. And, as well, just on a slight change from that point, I know when we started seeing this first, so probably going back certainly about 12 months ago, I remember talking to our agent down in Carlow, and he was finding, so it wasn't just people moving back to the area that maybe grown up there. He was finding, and he gave me the example of an Eastern European couple.
Is this Harry Southern?
Yes, exactly. Harry.
He's of course one of the best agents in Carlow.
Absolutely. And funny, as I said, we ask all our agents to put in comments each 3 months in this survey. And there's always a good nugget from Harry, a good insight, I have to say, always.
Well, there's very few people who know their local marketplace.
Their market, exactly.
Living in it and breathing it daily for so long.
Exactly. But he highlighted this particular couple, and they were going to have to commute up and down to Dublin every day. Now, Carlow to Dublin isn't so bad anyway, and
Carlow, where they're the outskirts of Dublin,
exactly. Exactly. One of them was going, I think, to City West, and the other was going somewhere also. They were just hitting the traffic and they were there, so that made a big difference to them. But for them, to give an example, it was just the affordability. They had been looking in the area of around kind of Walkinstown and Crumlin before that. And they just realized for that kind of money what they could get in a place like Carlow. And it was a commute that they could live with, Admittedly, further afield, it is probably people who do not have to appear at their office on a day-to-day basis that are looking to buy.
Well, let's take things a little closer to home, because as I mentioned at the start, yes, you're the spokesperson for REA on this particular report, but you're also working yourself there in Lucan. How are you finding the local marketplace there?
Extremely busy with regards to demand, extremely slim with regards to supply. I think it's the same thing can be echoed right around the country. We're probably fortunate in that it's not as extreme here, because within a couple of miles in almost every direction, there is new home development going on to meet some of the demand. So it's probably not quite as crazy as certain areas where we're not seeing any developments. Dublin West is seeing quite a decent amount in the surrounding area. But yeah, it's competitive. It's busy. It's all about getting the listings, and then the sales are following fairly rapidly thereafter. We're finding the turnaround time is quite low. We had a meeting this morning here in our office to go through our properties, and one of the properties is on the market about 3 weeks, and we're nearly wondering why it hasn't sold yet. There's active bidding on it, but it's just, things are just moving so quickly. It's staggering. And then we had another one recently where the vendors wanted to put it up at a price that we thought was a little bit silly on the high side. One viewing later and it's sale agreed, at the price that we, the professional, the valuers, thought was silly. So it's very hard to kind of second guess the market, because we're constantly being surprised by offers and prices that are being achieved for stuff. And and as well, Carol, it's hard to know where this is going to end unless they really ramp up the new home development. I know last night I was watching the news and our Minister for Housing indicated that it's really going to ramp up next year. And I really hope he's right, because last year and this year, obviously there's been huge challenges with COVID. And then I know from talking to a developer, he said, if we'd known how good the market was going to be, we would have plowed into things and when things reopened. But there was such uncertainty, we put pause on certain developments that we planned. And so that's obviously really affected things. And I do think that will come on stream next year, but I don't think it'll make a huge difference. I was mentioning also that the figures of approvals for the summer months by the banks is just higher than possibly ever. Yeah. The numbers and the amounts being lent, and this is despite a rising market, which is only going to add to the whole thing,
Okay, there are so many different dynamics there that I want to ask you about. First of all, you mentioned low supply. We've covered a lot on the show about new homes. Can you give me some insight into secondhand? The secondhand sellers, are they nervous about letting people physically into their homes? Are they nervous about the marketplace?
Yeah, that was definitely the nerves about access to their home was definitely a factor. I think it's less so at the moment. But I'm sure there is a certain smaller percentage of people who feel very vulnerable, are very scared about the health risk, and continue to avoid maybe making a move because of that. And that's quite understandable. But by and large, I think the majority of people are okay with it. They're aware that, I suppose, their property can be sold in a way that's quite safe from a health and safety point of view. And I do think we're going to start to see more and more people coming to the market that maybe they were putting it off. I think the big thing that was putting people off was uncertainty. They were unsure of how well their own house would sell when COVID hit first, because look, I sat in my office last April, 12 months, thinking the bottom was going to fall out of everything again. And thankfully that didn't prove to be the case. So I'm sure an awful lot of people who plan to up sticks and maybe trade up said, well, no, let's wait and see what what happens here. Now, obviously, we're all beginning to realize that the world is still turning, the market is still good, and people are realizing they can get very good prices for their house. But on the flip side, they just see a market that's manic, and they're probably saying, well, look, let's just stay out of this until things improve a little bit. What will drive it, though, a little bit is the cost of construction and the awareness of the cost of construction. I think that will put off people extending, and they'll decide, right, we need more space, we're going to have to move. And that might help bring a little bit more of the smaller and mid-sized properties to the market for people trading up. But it's been a really funny time, and definitely a lot of people have resisted bringing their properties to the market because of uncertainty. But on the flip side, people we have sold for are the ones who used the opportunity of COVID to take stock and maybe, move out to further afield because of lifestyle choices. And that's certainly brought a certain level to the market. But I do think as well, estate agents feel that the stock levels are really low purely because they're moving so quickly. But I think if any of us actually really look at our figures, we're probably selling a similar number of units to what we were doing pre-COVID. It's just at any one time less on your books because they're turning so quickly.
That also sounds like maybe it's not requiring the same amount of hands-on work that might have gone into it previously. And I think every agent will know the feeling of being a busy fool. It happens in every industry, but unfortunately, estate agents really get the tough end of the stick there. Barry, before we let you go, you mentioned there, this is one of the great things about not just being on radio, because actually now we're doing a video, I can actually see it in your face as well. You talk about how at the start of COVID, it felt like the bottom was falling out of the market again. And the way you say again means you remember the same way I remember, and so many estate agents remember, that actually the crash was not so long ago. The recovery didn't come equally to all parts of the country, and for many parts of the country, it certainly feels like estate agencies had only just got back into their rhythm when this happened. And we often talk about this in terms of our construction industry and our property industry being so resilient, but you can only be so resilient for so long. As an estate agency owner, how are you managing to go from, through the crash into recovery, and then this explosion in West Dublin, that was just so, that probably made for a very busy time. And then we're into this uncertainty, and now we're into a whole new kind of environment that really nobody knows what to expect. How do you manage that as a business owner?
Yeah, look, it can be exhausting to say the very least. Mentally, it can be exhausting. I always remember my poor father saying, sometimes you'd be far more tired after a day selling than you would be a day working in a field, digging or picking up stones. But no, it can be quite a tiring industry, and you take the blows, and the blows take their toll. There's no doubt about it. But from the point of view of running a business, I suppose, look, we operate by personnel size, quite a small practice here in West Dublin. I've always resisted the urge to expand in any major way, and that has probably helped me. I do wonder how the guys who run offices, who take on a number of staff when the market gets good, that must be a real challenge to try and second guess what's coming down the tracks. Like at the moment, the market is good, we're busy, we could probably do with an extra couple of pairs of hands. There's probably business there for us if we had the capacity. But the fear is, well, what conversation will we be having this time next year? Will the market outlook be as good? Because it can change so quickly based on government policy, banking policy, or just the general, even worldwide economy and the effects it can have on the Irish property market. So there is definitely, I suppose you try and learn to grow at a slow rate that you have the wherewithal to withstand shocks. Now, certainly, I do think what happened around about 2008 to 2013, it must have driven so many people out of the industry, which is sad to see. It's changed the industry massively. I think anyone within nearly an hour of Dublin feels the effects, where there's the big guys in Dublin doing the majority of certainly the commercial work and the new home work. Whereas, if you went back 20 or 25 years, the smaller agency were getting some of the local meaty stuff. I know certainly we did, whereas nowadays our focus is almost entirely on the 3-bed semi business. And maybe happily so, I'm not sure, but there's always these changes, and you just have to adapt with them and go with it. But it can be a little bit of a roller coaster at times.
I can only imagine. And finally, Barry, just because the proposed regeneration of West Dublin, almost doubling the size, more than doubling the size of Tallaght, is being proposed for a region that obviously is bordering on Lucan. Have you factored that into maybe some of the growth plans that you have for the area, or your expectations for the area?
Yeah, look, we're constantly looking at what's coming down the tracks, and obviously a number of years ago we could see how Adamstown was going to come in, and as much as it was planned to be a standalone entity, to a large extent Adamstown has been absorbed into Lucan, and nearly the address is now Adamstown Lucan, as opposed to the original plan was it was going to be Adamstown County Dublin, and that's been great for us, because there's no doubt we could look at our numbers from last year and we've sold a good few units up in Adamstown, and it's all helping to going towards our turnover and our bottom line. And we'll see the same now with the likes of Clonburris and other areas, and we feel very fortunate, I suppose, as the longest serving estate agents in the Lucan area, that we're there well placed to hopefully pick up a lot of the business in those areas. But with regards growing with it, yeah, for sure, there's no doubt, hopefully, as I kind of touched on there, at a prudent level, we would have plans to hopefully increase the size of our business, the size of our workforce, and the size, please God, of our turnover ultimately. But it's trying to, I think it's not so much trying to assess the quantum of new homes coming, it's trying to assess, I suppose, the timeline. And like Adamstown was meant to have been rolled out over, I think, a 4-year period. It's still going on 20 years later. And we know why, but I suppose you just don't want to jump the gun either. You want to be ready, but jump the gun. It's just trying to find that sweet spot.
Yeah. Okay. And I suppose the final question I have for you there, in terms of the wider REA network, when you were capturing insights from your members right across the country, did you capture maybe their expectations for their local markets over the next kind of 6 to 12 months?
Yeah, so generally, I suppose, and again, this came up on a personal level, we were very lucky in West Dublin in that the market recovered from the really bad years a lot sooner than other more rural areas. And as you say, before COVID, a lot of them were really only getting back to a functioning market in the last 12, 24 months before then. So they've certainly seen a lot more downs than ups. And a lot of them would be looking to the future, certainly with a large level of caution. They do embrace and appreciate this new phenomenon of the move to the countryside. I know a lot of our agents as well around the country have benefited from being positioned in beautiful tourist type areas where they've captured a whole new level of audience of buyers coming in from abroad or all around the country. It's quite interesting. The whole staycation thing last year has really thrown open Ireland as a destination for people, and people, instead of jetting out to Portugal, are now looking to invest in a small house down in Kilmore Quay or Dungarvan or West Cork or wherever takes their fancy. So all of that has helped, and it certainly, we do look forward with confidence to the market. I do think another factor which gives us great confidence is the central bank lending rules and the effect that they've had, that, you know, any homeowner should be a really strong buffer above negative equity, that shouldn't be an issue anytime soon for any of us. Thank God. So I do think we do generally look forward with quite a positive outlook on the way the market is, certainly in the short to medium term. Yeah,
okay, that's all very positive to hear. And as somebody who is constantly trying to turn the property conversation so that it isn't so Dublin-centric, despite the fact that we're talking now on Dublin South FM, you know, I think it's really important that we're seeing that knock-on effect for the regions as well, and the regeneration of the regions. You know, it's really positive development, I think, for Ireland as a whole, from a societal point of view. So Thank you so much for joining us. That was Barry McDonald of REA McDonald in Lucan. We'll be back after a quick break. Stay tuned.
93.9 Dublin South FM.
Welcome back to Property Matters here on Dublin South FM with myself, Carol Tallon. You can contact us on social media at iPropertyRadio or email hello@iPropertyRadio.com. We're now joined by Marcus Pavari, founder and CEO of Hyperin. Hyperin is a retail tech platform, and I have to say I came across Marcus when we were delivering PropTech talks somewhere in Eastern Europe. We think it was in Latvia, and going back 2 years. Marcus, as mentioned to you before we came on air, I was blown away by a presentation you gave looking at one particular project in Asia. But before we get into that, you're very welcome to the show, and you might just tell us a little bit about Hyperin.
Oh, thank you so much for having me, Carol. I'm glad to be here. So Hyperin is the mall management platform for retail real estate. So we offer all the tools that you need in order to run your shopping centers on a everyday basis. And the company has been growing well. We're very strong here in Europe and also have active users, over 200 shopping malls in Asia and Europe, and also have representation in North America and Middle East. So we are growing. And I'm also happy to tell you some of the insights of the industry right now. Companies we're seeing a lot of in Europe recovering from the COVID from 2020, and just glad to be here and finally seeing some physical meetings already happening in the industry.
Yeah, look, we're getting back to it, and hopefully soon we'll be back to doing our speaking on the circuits, and I'll run into you somewhere, whether it's in Europe or Asia. We'll run into each other again soon, which I hope. Right. So you mentioned there in terms of the company, so you've got a nice foothold there. Your headquarters is in Finland, but you've got a nice foothold across the Middle East and North America. The company is only established since 2008, so you've had great traction. A lot of what we're going to talk about, maybe will be dictated a little bit by COVID, but actually retail was one of the sectors of real estate that was massively impacted. And in fact, it was one of the first areas where the need for PropTech was recognised. So you might just take us back to some of the early days. How did you get into retail tech?
Well, that's an excellent question, actually, going back to the memory lane. When we started in 2008, shopping centers were mostly built as long hallways, and you had the actual shopping center offices in the basement level. So there was sometimes even no internet connectivity at the time. So it was actually very challenging to provide these tenant engagement services or even simple tools for sales reporting, which is one of the most popular features that we have on our platform. And nowadays, of course, you have the large mobile phone displays with 5G internet connections, so you can have all the services available through mobile internet apps. And it's a totally different game. But back then, it used to be all about location. And due to the COVID, it's more about the technology.
Yeah, I think that's a really interesting transition. And, it's so funny because COVID has dominated so much of the real estate response and technology, and it's been attributed to really driving technology across construction and property management. But the reality is, retail was a point of concern for almost a decade before COVID hit. So you might just, because you have the benefit of such extensive global experience, you might just talk to us, say, I mentioned there that I'd heard you present on one particular case study. I think that was based was that Singapore?
I think it was Hong Kong when we talked about that case in PropTech event with where we met last time, and we did a project for the Mass Transportation Corporation in Hong Kong, the MTR. So if you ever, or the listeners have been ever in Hong Kong, they know the subway system there because it's kind of the standard default service that you need to use to go anywhere on the island. Or the mainland. So we did them a footfall analytics / mobile loyalty application. So actually MTR as a corporation, they're not just the world's leading mass transportation service provider, they're also a major landlord in Hong Kong greater area. So they have capitalized their subways and bus stations by building retail areas on top of them. So when customers are entering or exiting their mass transportation services, they need to actually go through the retail area. So those customers are converted into shoppers. And when we addressed the MTR for the first time, they just wanted to have a very simple mobile loyalty applications where they can actually reward their consumers by spending time in the mass transportation system or in the retail area. And they wanted to also have anonymously track and data statistics from those users, that they know actually how they spend their time in the retail area and what products and services they are browsing, so they can better offer their tenant mix for this particular segments of certain age and certain gender, and improve the services overall. And at the same time, they are able to offer indoor navigation with beautiful 3D maps, and nowadays even actually augmented reality-based maps and these wearable technology devices such as Apple Watches. So the technology is really evolving there fast. As in Asia, you need to be very, very top of the game, offer these different consumer experiences, and the shopping malls, as you know, they are huge and offer these kind of different lifestyle experiences and destinations. So it's very competitive market right there.
Yeah, you touched on a couple of really important points there that I want to maybe explore. So one of them is, you refer to the term mobile loyalty. So it's, one of the early iterations of this we saw maybe, a decade and a half ago might have been when you were within range of a shop, you might get a text message. And then we ran into privacy issues. So you've absolutely addressed that technology has moved on, and it's much more sophisticated now, but actually so too are our privacy laws and expectation. So how does this, I know you mentioned anonymized data, but how does this sit globally kind of with privacy and changing privacy expectations?
Well, that's a very good point. Again, the privacy is the utmost important thing in this business, and as we are living in the European Union, we have the most strict privacy regulations in the world. And the world is not that much different in Hong Kong or Singapore. You still have those kind of cookie texts and end user license agreements that you need to accept and sign, and nobody actually reads them very correctly, but big companies like Facebook still do what they do about collecting consumer information. But the real trick is to do it in an customer-friendly way, so it doesn't kind of annoy the consumer user experience, but at the same time, you need to provide the customer the privacy they need, and also make them understand what kind of consent they are giving to your service. So that is the most important thing right now, that we need to innovate these new kind of services, but we need to make sure that they are give the right privacy to customers based on their consent, and also don't mix the customer user experience that much with these kind of legal text and cookie policies. So kind of make them more user-friendly ways, I think the key, and that's certainly the goal that we are aiming for.
Yeah, and look, and to be fair, there is a fine balance there, and we know that people are particularly aware of their rights under data privacy. And obviously, as you point out, the EU has the single strictest data policies in terms of personal privacy. However, we do know, for example, North America, states across North America are very much looking to Europe to establish what best practice is likely to be. So it's not a case that we're overshooting. It's a case that maybe other jurisdictions will likely rise up to meet us. In terms of the analytics, you mentioned there the quality of the analytics, the range, they've certainly evolved in line with technologies, and including wayfinding. It's very exciting if you can bring in immersive technologies to follow with that. But one of the things I'm really interested in is how to make a compelling case for shopping center operators or commercial property operators. Try to make the commercial case. So you've mentioned previously that actually the result of this can be exploring new revenue sources, which is critical for retail at the moment. Can you go into some detail about maybe how the right interpretation of data and understanding that, and the right interrogation of that data can actually open up new data sources? New revenue sources.
Yeah. Well, those are kind of something that can be obtained through the big data or even footfall analytics. So I just give you a short example. For example, the case in Hong Kong, which we talked previously. So while the MTR gives these rewards to their consumers, allowing them to give their consent for the anonymized data, so they can build a data picture with, for example, floor map and heat maps on top of them from their facilities or properties, and then they can see where people are going and if there's, for example, a lot of high traffic in certain floors, but they can also check from our platform the sales reporting from these tenant shops, and they can see a lot of traffic, but there's no tenant sales. So there might be a problem with the tenant mix. So the commercial management can do evasive actions based on the real-time data. And also on top of those data models, you can also have the specialty leasing sales, meaning the advertisement sales and e-commerce features are available in through our products and services. So based on the browsing data coming from various sources, such as the mobile loyalty applications or even Google Analytics, you can actually find out what kind of products and services your consumers are looking from your properties, and then you can actually offer better services to address those important customer segments by offering, for example, specialty leasing promotional places for certain companies to have physical appearances on the floor areas, or then you can also invest on the click and collect points, or even in the e-commerce side. But the bottom line is that you need to know your consumers. So I see many companies asking for us right now are, how do we get the big data? And the question I always answer is that what do you want to achieve with the big data? So do you want to know your customers better, or do you want to go to the e-commerce side, or as many these projects that the physical retail wants to transform into e-commerce don't work because they try to offer the same kind of products and services that they're not selling well right now online, which is not happening as the competition is online even 100 times harder than in the physical side. So connecting the physical and digital real estate in a smart way is what we are actually offering to our customers, to know their consumers, to know their target audience first, and then takes these first steps in order to boost up the commercial management or e-commerce or specialty leasing sales. So with specialty leasing and advertisement sales platform, customers can even achieve a 10% annual revenue growth coming from non-rental sources, making a really good way to recover from those losses from 2020 in certain tenant areas.
Actually, that's a really interesting one. So we might just go a little bit deeper on that. I mean, you make a very good point in terms of, marrying the online or the e-commerce along with the brand's physical presence, and that there is a lot more competition online to get eyes on the brand. However, offline within the shopping centre or on the main shopping area, there's a premium to be paid for that, an exceptionally high cost, much higher arguably than online, even with very expensive platforms and maximizing digital reach. You're still paying a massive premium to be in a bricks and mortar store. How are your clients, how have they fared over the past 18 to 20 months of COVID?
I think the situation is a bit different in Europe or in Asia, North America, Middle East. Every market is kind of opening a little bit differently. In China, in Hong Kong, Singapore, the Chinese tourists are still missing from the luxury malls. So in Asia, many customers are looking actually to have more efficient management solution just for this everyday management. As the salary level there is not so high, they had no problems before just hiring new people to run the shopping malls with emails and phone calls and spreadsheets, the normal management process. But now they're looking for kind of the more management software solutions such as Hyperion to make the management more efficient and let the actual management people to manage the company instead of doing this manual reporting in the shopping centers. And in Europe, mostly companies are looking to recover from 2020 revenue-wise. So a lot of these specialty leasing, online sales, e-commerce projects. So every market seems to be recovering a little bit same, but the good news is that in all markets, the people are slowly returning to the physical retail, brick and mortar, as the revenue of the traditional retailers are actually growing, even in the United States, which has been a kind of a decreasing market through the e-commerce and Amazon and the big companies taking over, especially during the COVID times. But now I think what I'm seeing and hearing is that people want to go out and they want to have these lifestyle destinations and they want to meet people. So as you know, people are physical animals. They need to meet together and have a time outside the home for a while. So I think it's going to be a positive turn after all.
Yeah, there's so much of what you've said there. The reality is, you touched on the growth of Amazon and other e-commerce retailers like that. Just today in Ireland, we had a report issued that the logistics and the industrial side of our commercial real estate is at a 20-year low in terms of vacancy. So as in, we've got the best occupancy across logistics and warehousing that we've had over the past 2 decades. However, retail is still feeling very much like it's in flux. So we've had a situation here in Ireland where we still haven't resolved what's going to happen between retailers that were closed down or restricted over the past year and a half, almost 2 years. In terms of rates, rents, they have run into arrears. We've got cases going through the commercial courts. And, obviously, as you would expect to hear in such cases like that, the retailers are reporting exceptionally low turnovers in these previously considered prime locations. And it feels like this isn't a new struggle because of COVID. This feels like a trend that was building. And, one of the things that I'm really interested in what you're doing is that you're helping the retailers to create a more experiential model. And I think we've known for the past definitely 6 or 7 years that this is the way retailers need to go. But there's some, is it a resistance that they're not getting there? It hasn't happened yet. The transition hasn't happened. And for all of our talk about technology, you mentioned there that in terms of the objective of the insights, it's to know your customer. And I feel like if somebody was to open a shop 100 years ago, they would have been given the advice, know your customers. So actually, the core of retail hasn't changed at all. Just what we need to know about people has become so much more sophisticated. So
exactly.
What are what's next? That's a big question, but I'm taking advantage of the fact that you have this global experience that you can see trends that are far ahead of Ireland and the UK. So is it a fair question to ask you, what's next in terms of retail trends?
Well, that's a kind of $1 million question. So I wish we could know, but what we are seeing right now is the kind of the new era after COVID. So few of the retail real estate developers are definitely moving into this hybrid model of serving both e-commerce and physical customers. And I think that's the right approach to move on, just to have those click and collect points ready, because you never know what the next COVID might hit you. So in a way, moving into this hybrid model, I think is the right way to go. But still, the brick and mortar has its advantages, that the physical appearance, the lifestyle destinations, the restaurants, the entertainment, not just the retail side, but at the same time, the retail mix needs to be very competitive. So I think the retailers themselves need to adapt to this new normal and offer the kind of products and services that you wouldn't necessarily can experience or get online very fast. We're also seeing this worldwide logistics challenges. So especially the Christmas market is coming. I think you might be more easier to get your Christmas gifts this year from the actual brick and mortar stores instead of ordering online. So there's a lot of different scenarios here. The climate crisis, the energy crisis. So it all comes down together to address this question: where are we heading? And I think the technology has been there, like with Hyperin, to go into different sectors to better serve and know your consumers. But I guess at the end of the day, the consumers will do the decision how they want to visit the retailers in the future, whether it's a virtual hybrid model or the physical traditional model. But I think, and according to all of the kind of industry analytics, it's going to be a kind of a mixed model.
Yeah, we hear the term new normal a lot, but I think it is more a case of the next normal, the next iteration of retail. And that was a big question to ask you. But my final question is hopefully not such a big one, but what's next for Hyperin?
Well, we are growing with customer revenues right now. And actually, that's a good point to announce that we already have been looking to publicly offer the company to outside shareholders as an initial public offering, most likely to be conducted by the end of the year 2025 in Helsinki, Finland, Nasdaq OMX stock exchange in the First North markets. So that's going to be the next goal for us as a company. And in between, of course, we are improving our retail real estate developer customers worldwide to better adjust to the new normal and to increase their commercial management efficiency and their sales and consumer knowledge. So that's, I guess, the big picture of what's happening.
Well, that's a big picture. It's also big ambition, which we love to hear. So thank you so much for sharing that with us. We'll definitely check in with you on the way. Have to ask, because you're in the rounds of thinking about an initial public offering, did you consider the SPAC route, which has been so popular across PropTech startups over the past 2 years?
Well, we had some experience in our previous companies and success. So we have been kind of bootstrapping our way, growing with customer revenues, having few investors to back us up in the beginning. So we have been kind of, the companies now very self-efficient and is managing itself very well with our advisory board and with the current investors. So in a way, we kind of wanted to have a little bit different route than growing with investor money, because we wanted to kind of be there for our early adopters and also grow as they are growing in terms of retail real estate. So it's been a kind of hard work for us, but it's starting to slowly pay off.
That's what we love to hear. Thank you so much. That was Markus Pavari, founder and CEO of Hyperin. And
thank you, Carol.
Thank you. And that's it from us this week. Thank you for listening in to Property Matters on Dublin South FM. You can get in touch with the show on social media at iProperty Radio or email hello@iPropertyRadio.com. Also, my thanks to Peter Rice on sound. We're back at the same time next week. From myself, Carol Talon, and all the team here, stay safe.